So I think the $1,000,000 question is, are you still holding Alibaba?
Wait, I'm very distracted by the vulgarity. Wait, I wait for him to end the.
Okay, welcome back guys. So today I have another special guest, which is Thomas. He's the founder of Steady Compounding, and he's actually a FinTwit influencer with more than 30,000 subscribers today. So before we start, let's get to know a little bit more about Thomas. So maybe Thomas, you want to share with my audience what do you actually do and where can they find you?
Yeah, so maybe I start off with what I used to do. I used to work for the Singapore government for maybe around 4 years-ish before I started blogging regularly about investing content. So I started blogging at around the 3rd or 4th year of my employment with the Singapore government. So I mean, I've always liked investing. I've been investing for about 14-15 years since I was 17 or 18 years old. So for the longest time, but I have never penned down my thoughts online at all, right? But the thing about writing online, I read somewhere whereby once you start sharing your ideas, you share your ideas freely with everybody else, usually more will come back in terms of, like-minded investors will reach out to you, so on and so forth. And so after I started writing for about 1 year-ish, there was traffic, there was an audience, and I get to meet a lot of other amazing investors just through writing online. And that was when I decided to go at it full-time. So right now I'm just writing full-time on Twitter and on my blog. So you can find me at steadycompounding.com. And the way I do it is I write about my investing ideas, I share my notes, I write about what I learned about investing, and I also write deep dives into companies specifically. Yeah, and so that is how I've been living from day to day since I quit my job. Basically just writing, investing, analyzing companies every day.
So maybe then I wanted to poke a little bit into your creator journey, right?
Yeah.
So why Twitter, not YouTube, not Substack or whatever other platforms there are out there?
Yeah, so I mean, I started out writing, I focused on my blog at first. And as you know, right, the first few articles, or rather the first few months, I was just writing into thin air. Like, you can write, but nobody read. Because ultimately, when you want readers, you have to go and find your readers. And so I was writing very frequently on Sidley, giving talks at a lot of events like for example, Sidley Personal Finance Festivals, or I'm on Financial Coconut, or I'm on the, Money FM, radio, just to try and get more audience. And it grew to a pretty sizable audience. But last year in September, I have one friend who recommended me to go on Twitter, because he says like, Twitter, you'll be able to meet a lot of other like-minded investors on an even larger scale. That's why you really start to meet overseas investors. And when I went on that platform, it was just amazing, right? The views just suddenly exploded and it got very viral. So I was able to find my so-called product market fit on Twitter. And since then I've been meeting like foreign investors once or twice a week, and I'm really enjoying the engagement there. Yeah, and so like as I keep on putting up my thoughts, my ideas, my business analysis, and then it sort of just took a life on its own. Yeah, and then it just grew from there.
Okay, thanks Thomas for sharing. So what if somebody that wants to start on FinTwit today, do you have any like tips or tricks for somebody new that is especially in this space itself?
I think Twitter, just like blogging, right? If your account is small and you're not that well known yet, whenever you're tweeting, you're just tweeting into thin air. So like, for example, if you have below 5,000 followers, right, then I think you should spend more time engaging other people first, the bigger accounts. So, they get to know you, then, probably they'll funnel some of the readers towards you. And that's where you grow first. So like, if you're starting out small, probably like 70% of your time you should be value adding other people's conversation. So let's say today someone there's a big account that starts a conversation, or maybe Alibaba. Then you go and try and value add to that conversation, value add to his followers by giving some real insights onto the company. And when people see that, they are able to tell that, oh, this guy got brains, then he want to follow you. Yeah, so if you want to grow your account, start off with value adding other people. Then once you cross that 5K hurdle, then that's where I think it will take a life on its own. You don't really have to do much. You just write your thoughts and people will just come in and engage you.
So because all of us are investors, right? So let's pivot into investment specifically. Pick on Thomas' brain and to see what he thinks about the outlook of the market today. So as we all know, I think growth stocks were essentially crushed. I mean, even value stocks are currently all on the downfall, and you look at S&P 500 down 15% year to date, Nasdaq down more than 20% year to date. So maybe I just wanted, like always, as I have many guests on my channel before, I always like to ask them as the first conversation starter. What's your outlook of the market today, and where do you think we're heading in the near to medium term?
I've always never had a clue as to where the market will go in the short term. But I know one thing for sure is that companies who are on circular tailwinds with a very resilient balance sheet and sticky cash flow that's coming in, they are not just going to survive, but they are going to eat up market share of their weaker competitors.
Right.
And right now, the main reason why a lot of growth companies are taking a lot of hit is because when the interest rate is going up, easy money just suddenly got sucked out.
Right.
Whenever we do projects in companies, right, you always have to prioritize because money is expensive, right? There's an opportunity cost to money.
Right.
And when interest rate is very low, the opportunity cost or the hurdle rate is very low. So they just kept burning cash to grow, hiring a lot of people. So now you see a lot of them having hiring freeze. Non-essential employees segment, not saying that it's non-essential, everything is essential, but now they really have to pick their battle. So I mean that's how it's affecting the company. Then on the other aspect, right, when it comes to Wall Street, whenever we value companies, we use the discounted cash flow model.
Right.
So when the interest rate rise, right, it naturally just bring all asset prices down. So right now, when it comes to investing, I really want to focus on companies with a very, very strong ability to survive any form of recession. I'm not sure whether there'll be recession or not. When we look at the employment data and all that coming in, it is still going very strong. Consumer spending is also strong. But the stock market is largely reacting to how the Fed is cutting off the supply of money and raising interest rate to try and curb inflation.
Right.
Yeah, and so we can't control all those macroeconomic factors, but we can control the type of companies we choose to invest in.
Right.
So when assessing this, you must make sure that your company has what it takes to survive through any form of downturn.
Right. So I also know that you personally do conduct courses, and I think the name of the course is called Zen Investing. Right?
Yes, correct.
So I think specifically in today's market where everything is just going up and down 10-20%, even though some are arguably quite relatively strong companies, and even your FANG stocks are up 5-10% daily. It's incredible. Maybe do you have any tips or tricks for people that are experiencing those kind of ups and downs on how to maintain that Zen mindset and to be really be able to combat the current situation that we are in today?
So Zen Investing is an interesting one because I never thought I would be teaching in a course, when I first started out the steady compounding journey. But it was, after I got active on FinTwit, I meet a lot of like-minded investors. So I got together with this other guy, my other co-trainer, his name is Max. Typically, the way to ride out market volatility is first you must know what you own. So you can't borrow conviction from other people. So whenever you read social media platform, or actually I don't even read the news headlines. Right. A lot of people will be telling you this stock is good, that stock is good. But you can't buy just based on that alone. You need to do your own work. You need to understand the value drivers of the company, and you need to know what the company is worth. And throughout periods like this, be it a down market or a bull market or a bear market, right? You need to always focus on the fundamentals of the business, and that's how you hang on through this volatility. And the next thing, one thing is knowing what you own. The next thing is conducting your personal life in a fair such that it allows you to hold through volatility. So the thing about a stock market drawdown, it usually would accompany stuff like recession, so on and so forth. So you want to make sure your emergency cash is sufficient, your insurance and all that is settled. Make sure that your own personal life is as robust, as anti-fragile as possible.
Right.
Yeah, so with that in place, then you know that your companies, within the next few years, you don't know how much they will be worth, but I can be quite certain to say that over a longer time horizon, they are going to be worth more than what they are worth today.
Right. Yeah. Depending on the business that you buy as well.
Exactly.
Making sure that it's a quality business.
Yes.
And maybe I just wanted to jump in and provide this very interesting saying. The other time, I think it was one of my professors or one of my friends that told me, you don't even check your blood pressure twice a day, but you open your stock portfolio at least 10 times a day because you want to know how much your net worth increases or decreases.
Exactly. So I think you touched on a very good point that the thing about human beings, right, is whenever we see flashing prices or when we see we go in and check, there's always a tendency for us to want to take action.
Right.
This is just similar to e-commerce. If Shopee or Taobao, whatever, they are always fighting your attention with the games, notifications, so on and so forth. So every time you enter the app, the more you enter, the higher the tendency for you to want to buy stuff. There will be a call to action there. So same thing for brokerages, right? The way they are incentivized is to try and make you to take action. So when you're on your brokerage app, nowadays the brokerage, they try to make it as fun as possible.
Right.
I think there's going to be like celebration and all that kind of stuff. So it's not very healthy. A few of the investors I know, right, they will uninstall the app every time they are done with a transaction. Only when they want to buy or sell, then they will log in to do it.
Okay.
For me, like all my notifications on my phone is dead, so I don't get notifications at all. And I don't really go in to check the stock price at all because it will just make you want to take action. And sometimes when you see the prices falling, extremely rapidly, our lizard brain will cause us to short circuit, because cortisol shoot up and you're not able to think rationally. So even if you want to open a brokerage app, right, you should be thinking about what you're going to do for that day and what's the factor that will cause you to take action. Otherwise, I recommend most people to just don't always check the prices daily.
Right, yeah. But you should still check out my YouTube videos daily. I think that's a quick plug, by the way. But anyway, I think I just wanted to share also. I think the first time that I actually discovered you was when you actually gave out your Alibaba research for free online for a very limited point of time. I forgotten where I got it from. I guess it was because my entire feed was all about Alibaba.
Right.
And then Twitter just pushes your article up. And then I was like, hey, interesting. And I looked through, I think it was a 30-40 page deep dive into Alibaba.
It was a very, very long deep dive.
Yeah, it was a 2-part or 3-part series, if I remember correctly. Yeah. So I think the $1 million question is, are you still holding Alibaba, and why or why not?
Yeah, so I'm still holding on to Alibaba. The fundamentals haven't exactly changed that much. So the biggest bear thesis probably is the Chinese government want to clamp down on them. But when we look at what the Chinese government is trying to do, they are not exactly out there to destroy Alibaba. They are really trying to make sure they grow in a more sustainable manner. A lot of people talk about that prosperity fund, that prosperity donation, right? Yeah, the common prosperity donation. And then, oftentimes I say like that's maybe $15 billion over 5 years or more.
Right.
And when we look at companies like Google, they are paying Apple $15 billion a single year. In 1 year alone, they are paying Apple $15 billion. And Facebook in the earnings call 2 quarters ago, they were saying also like Apple privacy changes, the ATT changes, cost them $10 billion in revenue also. Right. So I think once you get to a scale, there will always be this kind of tax here and there. It's either going to come from the government or it's going to come from your competitors. Right. Yeah, you can't really avoid it. But the key question for us as investors is to think about how much of that is priced in and whether this will be detrimental to the company or not. And I always like to give an example. Whenever there's increased regulations, people always think that it's going to be bad for the companies. But when you look at companies like Philip Morris, for example, the company behind Marlboro, right. When all the government around the world banned advertisement for cigarettes, right? Then it sort of just entrenched their position even deeper. Because like no new competitors can come out, right? Because there's no mind share from consumers. Right. And they are able to charge a high price and they just remain the dominant player. And shareholders who have held from the day they implemented this regulation until today, they have probably beat the market multiple times. And I think same thing for regulations. When you think about the regulation for companies like Facebook or even the China big companies, they are one of those who are able to have the resources to navigate around these regulations. When it comes to social media company, digress a bit from Alibaba. When you look at Facebook, the amount of money they spend on R&D and compliance is more than I think the next 7 social media platforms all add up together. And when we think about whether these smaller players, do they have what it takes to really compete with Facebook when there's this much regulation? You cannot have hate, you cannot have this, you cannot have that. And a lot of times, they don't have what it takes to spend the money on AI, to auto-regulate all this content that's coming out or hire people. Facebook still have to hire thousands of people to eyeball all this content to flag out, what's hate video or terrorism speech, and then they have to take all this out. And when we think about this, we always have to, trigger our second order thinking. At first glance, it seems bad, but are these rules applied to everybody? If it is, then probably the ones with the bigger resources, the one who has been doing it for quite some time, or even for Facebook, the one with the most amount of data point would probably survive better than the rest.
Right.
Yeah.
Actually, I also wanted to add on a very interesting research or somewhere I read along the lines. So initially when I saw the crackdown, right, I was thinking, China government is doing it again. Then I went to research, hey, so how does the investment trend how is the investment trend like in China? So I specifically went to private equity and looking into the trends of how much money is flowing in.
Yeah.
And to my surprise, actually in 2021, they did a record-beating number.
Yeah.
More money is flowing to China. Then it got me dumbfounded. I scratched my head and I was like thinking, I thought everybody's afraid of investing into tech, investing into what? And then I realized that, it seems like there is a change in the dynamics of where they're investing in. Everybody is no longer piling money into like your Meituan or your Alibaba or Tencent or likes.
Yeah.
They're all piling into like agricultural, smart agri. They start going into things where the government places more emphasis and concern on.
Right.
Then begs the question, if lesser and lesser people are pumping money into the rivals of Alibaba and Tencent, then who's going to stop them and who's going to eat their lunch? And then it makes me wonder, is this kind of regulation really good for the industry, or maybe the intention was right, but maybe the outcome no longer matches the intention? And there was this saying, right? The path to hell is all paved with good intentions.
Right.
So that was a very interesting thing that I actually floated this idea, I think, a few months back, because I was looking through in 2021 what was the trend like in terms of how much money is flooding into the Chinese market.
Yeah.
Because evidently we know that opportunities will just keep arising because it's a huge and massive market.
Right.
People don't want to leave China for that matter, even though they have like geopolitics and whatnot. Money they're flexible and malleable in many ways, and they go where opportunities are.
Exactly.
So that's my own short takeaway. So maybe I also wanted to tap onto like you mentioned Facebook, right? And I know you have a deep dive on Facebook as
Yes.
well. So personally, I'm also invested in Facebook, which is why I really love this particular interview, because I also wanted to pick your brains on Facebook. I do have a few audiences that are also interested in Facebook. So maybe do you have any updates on specifically about the Facebook of the company? And also, are you holding? Are you cashing out, or what are you doing?
I mean, I'm definitely still holding. I think at today's valuation, right, you don't really have to do a lot of math. I'm not saying that it's cheap, but there's only there's only one thing you need to think about: whether they are able to survive TikTok's threat. If you think they are not going away, then it's probably cheaper than almost any other big mega cap companies on the market. Right. I think the PE ratio today is just 15. It's a very simplistic way of thinking it using PE ratio, but Facebook is just at this ridiculous level. If you don't think they are going to go away, then probably it is cheap. The way to think about it right now is, are they able to navigate Apple's regulations or not? And so far, the trend seems to suggest that they are doing quite okay, at least when I speak to my marketers friends. So, I mean, the impact on Facebook at first was very, very real. All my marketers friends is saying like they are not able to see the ROI on Facebook anymore. It just evaporated suddenly. Right. But Facebook do what it can to help marketers navigate through this landscape. So when it comes to running advertisement, right, there's two aspects when it comes to advertising on Facebook platform. One is how targeted can the advertisement be. So that's one aspect. The other aspect is how much feedback is the marketer able to get. And Apple, the thing that hit Facebook the most, right, was that the feedback loop to marketers was cut off. Right. So last time when, let's say during Black Friday sales, when they run advertisement on Facebook, they're able to get second by second live update on Facebook immediately. And they are able to, when they're able to get the feedback, they're able to see like, okay, so this ad spend I'm doing right now, does it make sense for me or not? And oftentimes when it does, they are able to tune up, just expand their marketing budget on the Facebook suite of social media apps immediately, and that's where the spending will kick in. But when Apple cut that feedback loop away from all their Apple iOS users, right, now it takes like a few hours before the marketers are able to get that feedback loop. And when they are uncertain whether their advertisement is gaining traction, they are unwilling to spend more on the platform. And so Facebook has been working, working very hard to try and navigate this. But when we think about it, right, products, companies will always need to spend on advertising. And it is unlikely it will go back to linear platforms, meaning like your radios, your TVs, your newspaper, because those platforms are even suckier when it comes to tracking. Like you just can't track like how much is coming from there. And when it comes to having the amount of data points, right, Facebook and Google are the two companies that have the most data points on earth. right? And so it is always a relative thing. Marketers will still have to spend. Then the next thing is when it comes to their competition, TikTok is rising very fast. The interesting thing about the TikTok trend is that I think it's hurting YouTube a bit more than it's hurting Facebook. Because I recently saw a research whereby they published the amount of time spent on each platform. TikTok is rising, but it's plateauing in recent years. So I think that growth is actually slowing. But the time spent on Facebook family of apps, meaning like your Instagram and all that, actually isn't declining. It's actually holding up quite robustly.
Right.
And the one that's getting eaten up is actually YouTube. That's suffering a bit of decline.
Right.
So I think TikTok is a bit of more of a threat to YouTube than it is to Facebook. And one thing that's quite assuring to see is that Instagram Reels is actually gaining very, very, very big traction. And right now, they are not monetizing yet. And you can see that this is not the first time Facebook is pivoting from one platform to the other. So they started out on desktop, your browser viewing. Then after that, they have to migrate to mobile application. Then, with the invention of what's that app called? Snapchat, exactly.
Right.
Yeah, so I mean, that was a threat at first, but Facebook was able to copy them very fast. Monetization, whenever you pivot from one mode of media consumption to the other, will always slow down at first because they need to figure out how they want to monetize this new mode of content consumption. So when the IG stories first gain traction, revenue slowed down a bit also, right? Because they need to figure out how to monetize this. Then in the end, they managed to figure a way out. And I got no doubt that they will eventually figure out a way to monetize Instagram Reels as well. And it is growing extremely fast. Another interesting piece of research I saw, right, was that Instagram Reels have the ability to penetrate to younger demographics. But TikTok doesn't really have the power or ability to penetrate to audience above 35 years old.
Right.
Yeah, so you can see that if they are not able to, in the coming years, penetrate that age barrier, go above the 35-year-old age range, right, then they are likely going to plateau in a bit. But so far, IG have actually demonstrated their ability to go and reach the younger audience.
Right.
Yeah.
So I also wanted to echo similar thoughts on from how I look at Facebook's business, right? I don't know what is it Hokkien or what. There's this saying called "bao ka liao," right?
Right.
Essentially, all of for my non Chinese or Hokkien speaking audience, essentially means they catch everything. It's a full suite of products. You have Facebook that captures the older demographics.
Right.
You have Instagram that blends towards both the much younger audience and also in the middle age kind of audience.
Right.
And then now Reels trying to penetrate and trying to essentially copy what TikTok is doing. But TikTok essentially still, it has a very strong niche. I
Right.
no doubt that they have been stealing a lot of attention and eyeballs away from that specific group. But let's also not forget who has the purchasing power in this sense.
Right.
So people that has the ability to spend, it's probably people in their 30s and 40s and how they're able to monetize so effectively in that particular set of age group. Rather than TikTok now, for those of you who don't know, the TikTok monetization is essentially non-existent or it's bad at best. They all mostly just rely on like integrations or sponsorships, etc. In the in-house app itself, it's just terrible. It cannot even be seen. But anyway, I think thanks Thomas for really looking into these two specific companies because that's where majority of my audience congregate, right? Alibaba and Facebook. So if you can share, right, maybe just to tap onto your ideology on what would be a deal breaker for both companies that you're currently holding. So something that you said, okay, I have to sell Alibaba today, or I have to sell Facebook today.
Yeah, so actually TikTok is quite a big threat to Alibaba as well, in a sense that their commerce arm is growing extremely fast. And this is one frustrating thing I have about Facebook. Like the opportunity for penetration into commerce has always been there for the company, but they have never tapped on it. When you look at WhatsApp monetization and all that, they have never done a very good job at pushing the advancement of this technology. So when you look at TikTok, they are able to create a new form of, a new channel for consumers to shop. And, they are growing so fast, not just in China, but also Indonesia and abroad, whereby, the brands just go there, show the advertisement, and within one click, the product will be sent to your house. And so it's actually a bigger threat to e-commerce players than it is to Facebook at the moment, at least based on what I see, because their GMV is growing extremely fast. I don't have a figure in my head, but they are growing so fast that players like C Limited and Lazada here in Southeast Asia, they are sweating.
Right.
And they are trying to come up with similar styles of selling, social selling.
Right.
Yeah. And a deal breaker for me, right, when it comes to Facebook at least, I think if I see the monthly active users shows a very clear decline. But so far, they are still increasing.
Right.
You know, you thought like this is the most populous place on earth already with more than 2 billion users. It is still increasing every single year. And I want to see that the growth in Asia continue to go up and that the average revenue per user at least to keep going up. In fact, the most important thing is the monthly active users, I would say. At today's price, I don't think they are pricing in the metaverse at all. In fact, I think they should probably be a bit more prudent with the metaverse spending because it's not a proven product yet. Oculus is selling very well, but the concept of metaverse and taxing transactions on the metaverse, it is not. They haven't found the product market fit yet. So I probably want to see them a bit more restrained with the spending there. I want to see results first before they really pour a lot of money into that space. For Alibaba, so far they are fending against competition quite well. I guess similarly, like I want to see that the GMV holds steady for Alibaba. Pinduoduo actually don't seem to be doing that well in recent quarters. And I really want to see them build up their logistics capabilities. I think at the end of the day, right, I've come to develop a bit more appreciation for e-commerce companies with a bit of capital intensity, like similar to Amazon. Because to make the traffic sticky, right, you want to make sure that the consumer is satisfied at the end of the day. Yeah, so which is exactly what they are doing. They are trying to expand on the Cainiao logistics. And you know, one of the management plan is actually the Cuhai strategy. You know, when it comes to China commerce, they have two strategies. One is either go to the lower tier provinces or they expand overseas. And I think one of their big strategy is to have its product delivered to anywhere in the world within 3 days at a very affordable price. And so I want to see that happen as well. Yeah, so I'll be monitoring all these metrics regularly. And if the management is not able to deliver on this, or the unit economics becomes, you know, it no longer makes sense, then you know that would be a warning sign for me.
Okay, can understand. I also, I think I picked up initially about one part that I wanted to talk about. I think I ran an Instagram poll the other time. There was this idea that actually they started monetizing WhatsApp on the business side, but the monetization is still quite terrible. And on top of that, I think in some areas there was this idea about they're essentially just copying Tencent, the WeChat Pay, right? In WhatsApp, they have this WhatsApp Pay in some areas, but I think the traction is also not.
They are very slow at pushing all this out. They are pushed out in Brazil and India, I think. But I can't for the life of me figure out why they don't push it out. So earlier, there's so many fintech companies coming out and they have got the money, but they are not pushing it out. So it perplexes me why they are letting this slip or opportunity slip off.
Like digital wallets, and it's not like it's a new concept like metaverse, right? Nobody penetrated before. All this is just they're just copying each other and oh, China has done it. Let's get a playbook and then just plug it into the current business model. So that was also what I was looking forward to, but I think now it feels like I think my deal breaker for Facebook at least is if there are a lot of all these low hanging fruits that you're not taking on, and then they're going diving into the metaverse and whatever Mark Zuckerberg wishes and envisions, right? It's good that he still feels so alive for trying to penetrate and push these different boundaries. It feels like he's also going to Web3 and trying to redefine the entire space. But now it's still a lot of like fluffy words. There are not a lot of tangible stuff that you can see and touch. So I look forward to how they execute. But capital discipline is something that I look forward to. And even though Facebook did have a very great track record, ROIC 30-40%, I think easily for the last 5 to 10 years. But looking forward, of course, stock market is a forward-looking mechanism, right? So that's also one part that I worry, or at least it's on my radar constantly that I'm monitoring Facebook as well. So maybe thanks for sharing all the insightful comments and all the research that you have done. So I think the last part I just really wanted, I recently have been also asking a lot of my guests this particular question because I wanted to dive deeper into what you're thinking about. So the question then is, so what have you been constantly thinking at night, or what keeps you up at night recently?
Oh man, I sleep extremely well at night.
Right.
Yeah. So I mean, I don't really have a lot of things that's disturbing me or anything, but I mean, I'm always thinking about how I can reach a wider group of audience, I guess. Because ultimately, I think I've been a beneficiary of a lot of other people who put out a lot of good materials out there for me to learn.
Right.
And I think at this point in my life, I find a lot of satisfaction if I know that my work helped someone somewhere.
Right, understand. So okay, thanks Thomas again for coming online to my channel, and maybe just to end off on a conclusion, how can my viewers or how can my audience find you?
Oh yeah, so the best way to find me is on steadycompounding.com. And if you want to find me on my socials, you can actually find me at steadycompound on Twitter and on Instagram.
Right.
Yeah.
Okay, thanks Thomas again for coming online. I'll see you guys in the next video, but more importantly, I'll see you on the moon. Goodbye.